Legendary investor Chris Hohn has initiated a position in a company that I never analyzed before. It's trading near its 52-week lows, near its low in historical valuation. And it's a pretty amazing company. The more I looked at it, the more I fell in love with the stock. And I added the stock to my watch list because it's just such an amazing company with such a wide moat. And I never really looked into it. So I want to share my research in today's video, and I'm going to talk about the stock. And this stock is mainly Vulcan Materials, ticker symbol VMC. It's about a 1.3% position for him. It's likely a small position that he plans to add more of it over the long term. Now, he also bought Martin Marietta, which is another company and is somewhat of a similar sector. But in this video, I'm going to focus on the most well-known one, which is mainly Vulcan Materials. Vulcan Materials has been flat for over a year. In fact, the stock has really been flat since 2024 for about 3 years right now, almost 3 years, and it has been a little bit disappointing for shareholders. Now, Vulcan Materials has a very interesting moat, again, very interesting company, and what the company does is they pretty much turn big rocks into small rocks, and those small rocks are used for all kind of applications such as roads, building, and bridges, and those little rocks are mainly called aggregates. Those aggregates are crushed stone, sand, and gravel used in road, concrete, asphalt, bridges, foundations, and other construction projects. So anything that you want to build, if you want to build a new road or fix a road, you want to build a data center, build a school, build a bridge, build a military facility, if you need to build anything, you need concrete, you need asphalt. And for those things, you need those little rocks that VMC or Vulcan Material is selling them to you. Now, whenever you think of this business and you think of rocks and roads and things like that, it sounds very cyclical. It sounds like the company maybe is in a commodity-based sector and it has no moat or no competitive advantage. And this couldn't be further from the truth, because the main competitive advantage and mainly the moat of VMC is its location advantage, because those rocks are heavy, bulky, and expensive to transport. So the quarry, which is mainly this facility here where they have all the rocks, the quarry that is closest to the customer usually has the cost advantage. So the cost here isn't really about making the big rocks into small rocks. The main cost is transporting them, because there's a lot of regulatory stuff around it and they are very heavy to transport and they consume a lot of cost in terms of transportation and diesel and all kind of things. Now, if you look at this example, and this is why they have a moat or pricing power, you could say. This is the distant competitor, so not the one that's further from whatever the project is. This is a nearby quarry, okay? Now, the rock at the nearby quarry costs $20. The distant competitor is at $17. So you're buying the rocks cheaper from the competitor that's further away, but the transport for the competitor is $14. For the nearby quarry, it's only $5. Therefore, the total cost is $25 for the nearby quarry, and it's $31 for the quarry that's further behind. Even though you're paying less per rock, but the shipping cost is much higher. So this is how those companies have a competitive advantage, because they have a lot of those quarries, and those quarries are near cities, near projects, near certain areas where there's a lot of growth, a lot of infrastructure, a lot of buildings coming up. And if those buildings want to be built, they're going to have to go to the local quarry that's likely owned by Vulcan Material. And if another competitor wants to compete with Vulcan, they can't really build another quarry besides Vulcan, because they're hard to permit, they're hard to get. No one wants them in their backyard. So the ones that are there are going to be there forever. So if they want to even try to compete and they're further away, they can't do it, because their shipping cost is much higher to move the rocks. And if they're not going to be able to make it profitably, and Vulcan will be able to cut them out because they have the local quarry in a growing town, you could say. So this is a pretty amazing business model. And the more I looked into it on how many of those quarries they have all over the United States, where 60% of the population lives within 60 miles of a Vulcan aggregate operation, a Vulcan quarry, those are unique, irreplaceable assets. And the more I looked into it, the more I fell in love with this business. Because I really love, for example, the waste management companies. Maybe a lot of you guys know that. But this company has a better moat than waste management. Because with waste management, you have the landfills. But other companies can still compete on the removal of the waste. Sometimes you see waste management. Sometimes you see Republic services in the same area or in the same street. That doesn't really happen with Vulcan Materials, because if they own the local quarry and the other quarry is further behind, they pretty much own like a royalty on anything that's built in this area, and no one can compete with them. So that's a pretty amazing business model. And again, I was really shocked when I looked into it, because I've seen this company forever and I never looked into it. And you could clearly see the competitive advantage, where the company has had falling volumes since 2022, mainly due to higher interest rates and lower housing construction and residential construction in general. Now, despite volumes coming down, their cash gross profit per ton has increased from $7.83 per ton to about $11.33 per ton. So it shows you that the company has some control over their profits. They have pricing power. And the reason why they have pricing power is because they own the local quarries. You can't build another one. So if there's a distant competitors, like I showed you in this example, they pretty much can't do anything about it, because their transportation cost will always be higher than local quarry. So they have that mode that cannot be disrupted. And because of that, they can raise prices a lot and improve their cash gross profit per ton despite volumes going down or a down cycle, which is pretty amazing to me. Now, if you look at their longer term trend in terms of a cash gross profit per ton, it has grown from $6 in 2017 to about $11.33. Even during COVID, guys, during COVID here, 2019, 2020, they were able to grow the cash gross profit per ton. So again, I was seeing a lot of people on X claiming that Chris Hohn doesn't know what he's talking about, because he's investing in rocks, and rocks are cyclical and construction is cyclical, but they don't really study the moat of what causes them to be more profitable despite the down cycles. So again, that's a pretty amazing moat. And their target over the long term, they didn't say when, they said over the long term, their target is $20 of cash gross profits per ton, which would double their EBITDA from $2.5 billion to about $4.5 to $5 billion of EBITDA. Pretty amazing company, amazing moat. I'm a big fan so far. Now, I told you guys how they make their money. A lot of it is through a lot of construction, a lot of highway-related stuff. We have really old infrastructure in the United States. A lot of it needs to be renewed. You have a lot of reshoring coming back to the United States. This is a trend of deglobalization after 2020, because we don't want to depend on China for critical supply chains. So we're bringing them to the United States. This is a bet on all of that. This is a bet on data centers. This is a bet on anything that has to do with fixing our old infrastructure. And it's very old in the United States. The roads are old. A lot of things are old, and facilities are old. The prisons are old. Just things are old in general. And it's also a bet on anything that has to do with physical AI and growth and reshoring trends and all the trends that are very important. You cannot escape Vulcan Materials in the places where they have the quarries. Now, the interesting part about this business, which is actually similar to the waste management business, which is why I'm invested in it, is for this market, the aggregates market, 9% of the market is controlled by VMC, which is Vulcan Material. 24% is controlled by other public companies. 67% is controlled by private companies, by local mom and pop shops and just local businesses, or sometimes in certain cases some private equity. But a lot of it is mainly local businesses where those business owners are retiring, their kids don't want to run the quarries, so they want to sell the business, and they're selling it for a lower price to companies like Vulcan Materials. So the company has a lot of potential room for growth in terms of acquiring a lot of those companies where their business owner is retiring. And the company does spend a lot of money on acquisitions, about 40% of free cash flow they spend on acquisitions. And that's really good, and it helps them improve in general. Now, in terms of the cyclicality of the earnings, despite the company's pricing power, it's still somewhat cyclical. Sometimes they grow earnings per share 42%, 90%. Sometimes, as you should see in this chart, they decline 13%, 5%, 14%. Then they grow 62%, and they decline 1%, and they grow a lot. Now, their average growth has been about 20%, which was very impressive to me. 20% on average earnings per share growth, and are expected to grow 12% in 2026 and about 18% in 2027. And by the way, I'm using fiscal.ai to come up with this chart and all those charts. If you want to try it out, they give you 15% off if you use my link in the description. But looking at the valuation, and this is the hardest part to fathom with the stock, because everyone recognizes that this is an amazing company. And just for a rock company, you could say, a company that's selling rocks, it's trading at 28 times forward earnings. That's not really cheap. But again, that's because the market recognizes that this is a great company. And this is a hard part for me as a value-oriented investor, where I like to buy such stocks, but I don't want to really pay up for them. And for me, 27, 28 times earnings is lower than its historical average of 29 times. It's actually looking like a great setup. But for me, it's still a little bit too high, where, for example, I'm buying a business like GFL Environmental, which is mainly in waste management. It's growing 20% plus in free cash flow, and I'm buying it at 19 times cash flow. This one is trading between 26, 27 times cash flow or earnings. And it's a great business, amazing moat, but for me, that's a little bit too much, unfortunately. Now, if it does go below 26 times, it gets 25, 26 times, that's normally where it had a history of bottoming out, and that has historically been a good time to start a position, about 25 times earnings. Now, if I want to look at where the stock would be at 25 times earnings, I'm going to look at the analyst estimates for this year in 2026. It's about $9.15. I'm going to take in $9.15, and I'm going to time it by about 25 times earnings. I'm getting about $228 per share. The current price is about $270 per share. So this is about $50 per share lower. If it does get there, I think I would not be able to look at it and do nothing. I would be most likely starting a position and dollar cost averaging into it over the long term. And I think if we do get to 25 times earnings and we hold 25 times, which is highly likely, and we don't get an expansion or a contraction, I would expect the earnings per share growth to at least, mirror their long-term growth in general, where the company is expecting to double EBITDA. If they can double it in 5 years, this is about a 15% annual return to hold a high-quality, wide moat company like Vulcan Materials. So I'm a big fan. This one is on my watch list now. I've never looked into the stock. I did because Chris Hohn bought it, and I look up to him, and I invested in a lot of stocks actually before he did, mainly a foreign stock, exchange stock that I actually bought it before he did. So it's pretty interesting, and yeah, it's an interesting stock, and I wanted to talk about it. And that was my opinion on VMC. I hope you enjoyed it. It was not financial advice. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.